Hey there, welcome back to our channel. In today's video, we will be talking about Chapter 4 of The Intelligent Investor by Benjamin Graham. This chapter is titled General Portfolio Policy, The Defensive Investor. In this chapter, Graham provides guidance on how to construct a defensive investment portfolio that will help protect investors from market downturns and volatility.
Graham begins by outlining the characteristics of a defensive investor, who he defines as an investor who is primarily concerned with the preservation of capital rather than the pursuit of high returns. He notes that defensive investors tend to be risk-averse and focused on the long term, with a preference for conservative investments.
Graham then goes on to provide guidance on how defensive investors can construct a portfolio that meets their needs. He notes that defensive investors should focus on building a portfolio that is well diversified across different asset classes, including stocks, bonds, and cash.
Graham advises defensive investors to allocate a significant portion of their portfolio to high-quality, dividend-paying stocks. He notes that these stocks tend to be less volatile than other stocks and can provide a reliable source of income for investors.
In addition to stocks, Graham advises defensive investors to also include bonds in their portfolio. He notes that bonds can provide a reliable source of income and can help to protect investors from market volatility.
Graham also emphasizes the importance of holding cash in a defensive investment portfolio. He notes that cash can provide investors with the flexibility to take advantage of market opportunities as they arise, while also serving as a buffer against market volatility.
Overall, Graham advises defensive investors to focus on building a portfolio that is designed to weather market downturns and volatility. He notes that while defensive portfolios may not provide the highest returns in bull markets, they can help to protect investors from significant losses during market downturns.
Graham also provides guidance on how to evaluate individual stocks and bonds to determine whether they are suitable for inclusion in a defensive investment portfolio. He notes that investors should focus on stocks and bonds that are high quality, with a proven track record of stability and reliability.
In particular, Graham advises investors to focus on stocks and bonds with a strong financial position, including a low debt-to-equity ratio and a history of consistent earnings or interest payments. He also advises investors to look for stocks and bonds with a long history of stable dividends or interest payments.
Graham notes that investors should be wary of stocks and bonds that appear to be too good to be true, such as those with very high yields or those that have recently experienced a significant price increase. He notes that these types of investments may be more risky than they appear and may not be suitable for a defensive investment portfolio.
Overall, Chapter 4 of The Intelligent Investor provides valuable guidance on how to construct a defensive investment portfolio that is well diversified and designed to protect investors from market downturns and volatility. Graham emphasizes the importance of focusing on high-quality stocks and bonds, as well as holding cash as a buffer against market volatility. By following these principles, defensive investors can build a portfolio that is well suited to their investment goals and risk tolerance.
So that's it for today's video. If you enjoyed it, don't forget to give it a thumbs up and share it with your friends. Also, make sure to subscribe to our channel for more videos like this. Thanks for watching and we will see you in the next one.